Yes, we are back. This question is not simple. It requires too much of concentration. And you are welcome back. And let us actually continue. And we actually finish up because let us actually go to our question again. Yes, we had just gone as far as staff allowances are concerned. So we have this item, the fixed deposit investment attracts an interest of 20% per annum, and some interest is due as at 31st December. So this one you can change it. It is 31st December 2020. 2020. So it is not 2019. So, how can you deal with this item? Because the fixed deposit investment, which attracts an interest of this, it means an investment will actually generate a revenue equivalent to 30% of the total investment value. So, if you can, so here it is this interest is an income being generated from a fixed deposit investment. So when this income comes, we have to recognize the receipt of this interest income. In other words, the accounts that will be affected this time will be cash and cash equivalents will be affected by this 20%. So how do we go about that? So we come as we've been doing and log into our accounts, ledger accounts. We had finished staff allowances, then accrued staff allowance. So we have to open a ledger for fixed deposit interest income here. So we have to also open a ledger for cash and cash equivalents here. So meaning that a recognition of receipt from interest is a benefit to the entity. Therefore, we shall have to come and recognize. We know we said that all incomes are credited and expenses debited. You credit incomes and liabilities and debit expenses and assets. So being interest income being an income, we have to recognize it in the credit side of its ledger or respective ledger account. So here we shall actually come and say this is because two accounts have been opened, the cash fixed deposit interest income account and cash equivalent account. So now here we are going to recognize this income in this side. So we shall say cash and cash equivalents. Cash, this is cash, and cash equivalents. We recognize here the 20%. The 20% of the what? Of the investment. The 20% of our investment. How much is our investment? If you can actually refer back to the trial balance of ours, the investment is here. Where is it? We need an investment. The investment, this is a fixed deposit investment worth 10,000 or 10 million. So now, meaning that we shall come here and multiply by 10 million. So this is our 2 million realized from this very investment. Now we are continuing. What we are going to do is we have credited fixed deposit interest income with 2 million. Therefore, we are going to recognize. This is not, could be amidst the year or 31st. Okay. Then we have to debit our cash and cash equivalents. But now this cash and cash equivalents on 1st January 2019, I think the trial balance has a balance brought down. There is a brought forward of cash and cash equivalents. So let us actually extract this. Our cash and cash equivalents they are here, 54 or 5,400,000. So we are going to come here, say 5,400,000. Recognize that before. Then we shall actually come. This was a balance brought forward according to cash and cash equivalents. Then we have another income, this one. We shall recognize it as what? As a receipt. Because we shall receive this interest. It could either be through the bank or it could be either cash. So now here, we come here and say this is fixed deposit investment, because an account heading here must be an entry in the corresponding account. Deposit investment, deposit interest income. Then we put here our 2,000. So now, meaning that here 31st December 19, according to cash and cash equivalents, balance carried forward will be equivalent to 74. So that is it. So this one, they carried forward, the balance carried forward according to this will be 2,000. The account is closed here. The account is now closed. Balance brought down will appear here. So this is how you deal with cash and cash equivalents. That's how you deal with cash. Cash and cash equivalents. Then, that's how you have actually finished up dealing with fixed deposit interest income and cash equivalents. Then from here, we have to continue. Because according to this, we have our item. We have this item because this one is already taken care of. Then we have this item of the market store fees received. 50% relate to the year commencing 1st January 2020. So meaning that out of the market store fees received, the 50% was for 2019, then 50% was for 2020. So how do you handle? For this case, you have to come and open market store fees. Remember, this was, so we have to bring the balance, that is 1st January 2019 or 1st January 19, the balance brought forward. So the market store fees, where is market store fee? Because we are picking a figure. Market store fees, we are picking a figure from this trial balance. We shall get it from the list of what? Of incomes and liabilities. Where is it? Street parking, market store revenues. So this is the one. We are actually taking this market store revenues. So the opening balance here will be 9,100. That is 9,100,000. Then we shall remove the 50%. Because they are saying 50% of this money related to the following financial period. So it means during the course of 2019, we shall remain with a half, 50% for 2019, 50% for 2020. So we shall actually come to this, to the debit side of this account. We actually come here and say this is 31st December 19. We transfer. We have prepaid, prepaid market store revenues or fees. You can say fees. So now we put here 50% because we want to see